This is Kyle Green from Mortgage Alliance. I'm here to talk to you about the new CMHC, one of the new CMHC rules that came into effect on April 19th, 2010. This rule that I'm going to be talking about in this segment is regarding the business for self rule changes. In the past, we could actually finance a business for self client who is stating their income, meaning they're not showing enough income on paper to purchase the property they're looking at, so we'd actually state their income, an amount that would allow them to qualify for the mortgage. And these rules have limited them from a 95% financing down to 90% financing. CMHC also changed the guidelines with regards to how they would refinance clients that are stating their income, and they've lowered this from 90% refinances down to 85% refinances. One of the interesting things about this as well that they've changed is typically on a stated income deal, if you don't show enough income on paper to qualify for the mortgage, so instead of you coming to us and saying this is how much money we earn and we tell you how much money you qualify for, it's almost the reverse. So you actually come in, you say this is the property I'm looking for, how much money do I need to earn in order to qualify for that? And we would state your income at something that's a little bit closer to what you actually claim as your gross income on your taxes. Now with this method, we're in a situation here where the CMHC guidelines are changing in a way that people over 3 years in their business typically are starting to show better cash flow on paper, as most of your expenses have already been paid for. Most of your materials and costs have been covered, and you should be showing more income on paper. Anybody who's been in the business for more than 3 years is going to have extreme difficulties getting a CMHC stated income loan. As well, if you're below the 2-year mark, CMHC is also going to have issues lending to you because you don't have enough experience in the market. So we found that it's very difficult, and we've had a window of opportunity really shrink here for business for self clients. If you've been in the industry before for a number of years and you've been business for self for 1 year, sometimes CMHC will look at that. So we've basically got in a best case scenario, if you're a business for self client, you need to state your income to qualify for your home. You're looking at having to be business for self for between 1 and 3 years. Or if you haven't had any prior experience, having to be business for self for your 2nd or your 3rd year. So it's a very tight time frame there for anybody who's looking to state their income. If you have any questions or concerns, please contact me at 1-888-531-8890 or at kyle@homelinecanada.com.